But Karan, we
Do you
just
want to
punched.
go
Yeah,
through the outsiders checklist quickly?
yeah.
It's in the
So
book.
yeah, so allocation should be CEO led. I'm going to layer on for that for myself that the CEO better have a huge stake in the business if he's going to be allocating the capital and be in the same
Okay.
shoes I am as a shareholder. Start by determining the hurdle rate, minimal acceptable rate for projects. So this is about allocating the capital and getting a
Like the
certain
cable companies with John Malone.
and getting a certain rate of return. And if they don't get that, they're not going to invest. This is also Buffett, the way he ran his insurance businesses forever. We're not going to do business. We're not going to sell policies if we don't get the pricing we want.
True.
This is a big thing right now in the oil business, Karan, after what they've gone through in the last few years. Every CEO, and they are actually doing it now. They're basically saying, like, we're just not going to invest if we don't have these a certain return. Calculate returns for internal and external investment alternatives. So it's a CEO, if I'm understanding this, that not only looks at their internal options, but is open to acquiring businesses or going into other industries
Right.
in some cases. Calculate return for stock repurchase. So instead of just saying, oh, well, we just repurchase stock every quarter to keep our stock price high, actually thinking about an investment.
The intrinsic value. Yeah.
The same way you would think about buying another stock or acquiring another business or capital allocation or investment decisions, thinking about that for your own stock when you repurchase it. Thinking about after-tax returns and thinking about being tax efficient.
Yeah. So this is also something John Malone related, where he literally had like a separate team for tax, and he's like, "How do I reduce my tax bill?" So that's
He had an internal team. He didn't outsource that. He wanted someone working full time on it.
Yeah.
And by the way, if the corporate rate now is 20%, there's not a lot of expense items on that income statement that are 20% rate. So it is one of the biggest expenses out there that companies can try to get down. Determine adequate cash and debt levels. What does that one speak to, Karan?
So I mean, again, like debt, not all debt is bad. If you can borrow like Buffett did at say 0% and buy like Japanese companies that have dividends that are more than the rate of interest that you're paying, makes a lot of sense. Like, and it also eliminates a lot of your currency risk. So that's again one of the things that these outsider CEOs did. They borrowed when it made sense, and they weren't in a rush to pay down that debt.
Totally. And we see this with Warner Brothers Discovery and Paramount Global. A lot of debt, but when you look at when that debt, how far that debt is spaced out and the fixed rates, all of a sudden becomes a lot more manageable and in some cases a very, very good thing. Decentralized operations. So for this one with me, Karan, I'm not going to be turned off by a CEO if they're the kind of in the weeds CEO. But these certain CEOs that had these outsider aspects, they definitely were like the operations were secondary to them, second to the capital allocation strategy, as long as the operations were being run the right way.
They kind of figured out how to align compensation in a way that even the managers had a more long-term view. It wasn't about the short-term profits. So decentralized, but with the right compensation in a way. Yeah, alignments.
Karan, you got one thing I haven't thought enough about over the years, and I'm going to say it seems like a lot of people don't think enough a lot about, is that second line of management below the CEO. A great outsider CEO also needs great operators to run it day to day. You think about Amazon and the run that Jeff Bezos has had. He had those two guys. Andy Jassy was one of them, and then the guy who was on the retail non-AWS side of things has since retired. But he had two guys running things. We read the Tencent book, and we heard about the managers of those individual businesses. And those guys, those businesses wouldn't be what they were without those guys.
Not at all.
So super important.
Like it still blows my mind that WeChat, like there's one guy who's kind of managing WeChat, like, and they don't like go off
and
from
not only what the guy who I think spun it up or started it, but he also enforced for as long as he could that culture of like, hey, we're not going to advertise,
Yeah.
and kept that core mission of, and that he had ownership of that line of the business.
True.
So those second level managers are like super important if you're looking at an outsider CEO.
And you
Uh,
don't get that in the first glance. You only understand that once you've been tracking a business closely for an extended period of time. Like I know Buffett didn't buy Coke for a very long time until like he found the price was right, but he was still tracking the business without owning the stock. So
Well, and I've seen that as someone who hasn't owned Warner Brothers Discovery, but I'm still tracking it very closely because I know you follow it, and then also very related to Paramount Global. So I follow these things. Um, uh, Zaslav has talked a lot about turning Warner Brothers Discovery into a real business where individual managers have ownership day to day over their area of the overall business, that their business within inside the overall company. He's talked a lot about that, and I guess him or some of these managers have made some hardcore decisions, like we're shutting down these operations or we're getting rid of these TV shows or movies. So that's an example of like, no, I'm not in the business, but I'm seeing that second level of management kind of play out over time, and it gives me confidence as an outsider that I don't know if they're going to make it the way people want them to make it or not, but they're doing what they need to do in terms of that area. To
huge
do it.
parallels between what Tom Murphy did when they acquired ABC. You can see that with Warner Brothers Discovery.
Yeah,
It's a small
they had
company.
the limousines. He said no more limousines.
Yeah,
Yeah, yeah.
yeah, that too. So like a lot of cost cutting, a lot of like crushing whole departments, like what we saw with CNN Plus.
You know
I mean,
who I'm waiting for,
uh,
Karan, is we hear about these rare CEOs that make their company when they go on the road. They make them stay in hotel rooms, and I don't know if this happens anymore, but apparently it's a big deal if you made them stay like 2 to a room. I've heard of I've heard of that before. 2 to a room. I'm waiting for the CEO that says, "No, these are big beds. How about 4 to a room?" You know, just grown adult, just don't know these people. They're just coworkers, but when you're on the road, we got to get that hotel room from $119 twice to $119 once,
I'm going to
because that
save the cost.
$119 is going to make a difference on our $20 billion company. 4 to a room, Karan, you know, whatever the hotel will allow. I'm waiting for that CEO. Haven't found him yet. Maybe he'd have trouble retaining talent at his company. So I guess
Maybe, just maybe.
you have to walk that line. Retain capital only if return is expected to be over the hurdle rate. What does that mean?
So it's similar to like what Buffett says. Like if a company is able to generate $1 in value for every dollar of retained earnings, makes sense for them to continue reinvesting. If not, they should kind of return the money to shareholders, either through repurchases or through a dividend.
Yeah, and don't buy your headquarters. Don't keep the cash on the books. Give us shareholders that money if you got nothing to do with it.
If they're not able to achieve that expected return, like with Berkshire, it's I think 10%. Like they look for 10%. That's the opportunity cost of capital.
Okay.
So that's kind of what they look for. Obviously, it's different with different interest rates, but I know they at least try to get that 10% rate of return at Berkshire.
Consider a dividend if there's no better use of capital. Kind of speaks for itself. And then when prices are high, I love this one. It's okay to sell or issue stock. It's a good thing.
Or even
if the
sell
prices
entire
are high.
divisions.
Yeah.
Yeah. Like what we saw at General Dynamics, like the guy was willing to sell the aircraft division even though he himself loved it. He's like, this is the right price. I'm going to sell it. Makes a lot of sense. And funny enough, the company got back into aircrafts at a later stage, although he wasn't the CEO, but the company got back into it with Gulfstream. So when it makes sense, buy. When it makes sense, sell.
Yeah.